But let's get the read from Professor Brian Brenberg at King's College Business and Economics, Fox News contributor. Mitch Roschelle back with us as well, Macro Trends Advisors, LLC founding partner. Mitch, begin with you on this. Seems wholly, at least partly maybe, in the control of an administration that could open up the spigot to all energy sources, wind, solar, and all that, but not at the expense of what got us in the energy driver's seat.
Didn't the president do this by executive order? Isn't the energy secretary part of the executive branch, right? It seems pretty simple to me. We were energy independent. We're now dependent upon foreign countries, some of which who aren't our friends, for oil. And natural gas, which is the thing that we produce, is the thing that's most sorely needed during the heating season that's coming. I just got back from Michigan. It was cold there. And when you talk to ordinary folks in Michigan, they're like, we don't want to pay $2 more for natural gas. So I think that this is a kitchen table issue for all Americans.
All right. Yeah, Professor, we're going to watch closely in and out of this briefing that the secretary is going to have, Pete Buttigieg. But one of the things he said right now is that by exploring and all the possibilities in this infrastructure-only plan that was passed on Friday, we're going to be addressing these energy needs, and then we're going to see things get under control, go down in price. Don't worry, calm down. What do you think?
Yeah, when's that going to happen? 10 years from now? 20 years from now? I mean, who believes what he's saying? I don't think people look at this bill and if they can figure out what's in it, number one. Number two, they say, I don't see any of this alleviating my concerns right now. I'm going to spend Christmas in Minnesota. I know it's going to be darn cold. I'm going to be paying a lot for heating prices. And I look on the horizon and I say, does this administration have any concrete plans to do anything about the prices we're paying? Absolutely not.
See, I don't think, gentlemen, it would be a huge pivot, maybe a slightly embarrassing one to the environmentalists to say, getting out of the whole traditional fossil fuel thing was a bit of a mistake. The timing was a bit of a mistake. It's still our eventual goal to find all these other cleaner sources of energy, but we're not giving up on that. That bought us these low prices to begin with. But you can really fairly, and I'm not playing politics here, mark this energy run-up almost to the day Keystone was shut down. And had they not done that, and even with emphasizing these other alternatives, I don't think we would have seen the run-up that we've seen.
Well, the energy secretary, when she got done laughing, said it's a global commodity. Well, we're part of the globe, and we were a producer, and when our supply was no longer in the world supply, that impacted prices. It's pretty simple freshman economics, supply and demand. I think right now, since inflation is starting to run away, we could see 6%, 7% inflation, and since fuel costs are inflationary, they're part of everything we do, okay, and part of delivering food to stores is energy prices. Why not make us energy independent again? Why not open up the spigot literally so we can begin to control one thing that's part of inflation that's potentially controllable, which is lowering energy prices?
It's interesting, too, and we will dip into the secretary in just a second, but I wanted, Professor, to get your view on his view that the worst of the inflationary problem is going to be behind us. And he bases that on the notion that all of this spending, far from contributing to inflation, will actually get it under control. And now he quotes these, and others in the administration, these 7 Nobel economists, who say that that's the case. And I always say, wow, it's not a great leap to get a Nobel Prize. But I'm just saying, I'm not being facetious, but just get the point. How can it not be inflationary?
I'll take just a little bit of logic over a Nobel laureate any day, actually. In one breath, he can say the problem's going to go away. In the next breath, say, because we're going to spend a whole lot of money. People don't buy that. And the problem when people don't buy it is inflation is based in part on people's expectations. If everyone thinks you don't have a clue how to solve this, in fact, you're going to make it worse, that's when people start saying, well, I need higher wages. I'm concerned about higher prices. I'm going to start hoarding now, which is going to start driving up prices. This becomes a self-fulfilling prophecy when the Secretary of Transportation or the Secretary of Energy is speaking nonsense. And right now, when you're talking about spending your way out of inflation, I'm sorry, with all due respect to Nobel laureates, that's nonsense.
You know what's interesting, too, about the inflationary argument and even the supply chain situation? The administration argues, I can partly see this because a lot of this run-up, we went from an economy in part during the pandemic to one that was picking up steam. So the year-over-year comparison is going to produce this supply-demand situation that's gotten us here. I get that to a degree. But the administration, to a man and woman, has been saying this is a good reflection on us and the appetite and the balance sheet, wholeness of the American consumer, that he or she are in the position they're in to weather this, and happily so, and buy this, hence the strong retail sales, the optimism that abounds in these consumer surveys. So they're selling it as a positive. What do you think? They
sell it as a positive, then blame the consumer for consuming too much, and that's why we have this supply chain problem. That just doesn't make sense. The fact of the matter is, consumers will stop consuming when the price is too high. You're the economics professor. It's the elasticity.
No
of
Nobel
demand.
laureate, though. Sorry.
That's right. Fair enough.
What is the point that normally inflation stops, right, when people stop paying the higher prices?
Correct. And
what is the trigger for that? Because I don't see the trigger yet, or people aren't responding. They might be shifting their spending priorities and all, but what do you say?
Well, we've been throwing a lot of cash at consumers. They're still spending through that cash. Apparently, we're going to send a lot more cash their way. We did we did $1 trillion for infrastructure. We're going to do another $2 trillion for whatever's in that plan. We don't really know. I don't see the spending stopping. The Fed's talking about easing back, on its bond purchases and maybe raising interest rates. Well, I'll believe that when I see it, because we got an awful lot of debt to monetize right now. And I can bet the Biden administration won't be happy when the Fed starts jacking up interest rates. So you prove to me that you want to do something about it. Paul Volcker proved it. Interest rates went through the roof to curb inflation. In the
Remember,
early
he
80s.
would raise rates 1 full point at a time.
You can say all you want, prove it. And right now, we've got zero proof.
Well, I know someone who's not getting a Nobel Prize. All right,
Didn't plan on it.
Let's go to the White House right now, gentlemen.